各位午安，歡迎嚟到 iFAST Global Market 嘅投資講座，我係今日嘅主持人阿 Wing。隨住 AI 同埋記憶體相關嘅主題持續火熱，踏入2026年嘅下半年，到底呢股升浪可唔可以繼續持續落去呢？作為投資者嘅我哋，又應該點樣部署呢？今日我哋好榮幸邀請到兩位講者，首先登場嘅有 iFAST 新加坡嘅高級投資組合經理 Weiren， 佢陣間會用英語同大家做分享嘅。跟住落嚟就會有我哋 iGM Hong Kong 嘅高級投資顧問 Gordon， 就會用翻廣東話為大家帶嚟債券同埋基金嘅實戰策略。喺正式開始之前，我想同大家介紹一下我哋嘅 iFAST 逆風集團。iFAST 喺2000年喺新加坡成立嘅，2014年已經喺新加坡嘅交易所上市，喺主板上市嘅，上市編號係 SGXAIY。發展到今日，我哋嘅業務已經遍佈新加坡、香港、馬來西亞、中國、英國同埋美國。我哋嘅平台提供過萬隻嘅理財產品，包括基金、債券、股票、ETF， 同時設有專業團隊管理嘅全權委託資產管理服務 DPMS。除咗自助理財之外，我哋都有經驗豐富嘅財富顧問團隊，為大家提供呢一個理財建議，因應你個人嘅投資狀況同埋財務目標，提供度身訂造嘅策略。跟住落嚟，我哋就進入第一個環節，有請 iFAST 新加坡嘅高級投資顧問經理 Weiren。Let's welcome our first speaker, Weiren, to share his topic.
So I'll be sharing with everyone where we think the opportunities are, what to avoid, and what you should be doing with your portfolios right now. Now, let me start with the one thing that's making everyone nervous right now, and that's oil prices. Oil is currently above $100 a barrel. The Strait of Hormuz is effectively closed, and this is also the worst energy supply disruption in history. And if you have been reading the headlines, I know it feels like this is something the world has never experienced before. Okay, but I want to show everyone something today. Okay, I want everyone to take a look at this table. So what you're seeing here is the history of major oil price shocks going all the way back to 1973. So in 1973, oil prices went up by 300%. 300%. And at its peak, oil prices was at $12. Okay, but now here's the thing. $12 in 1973 is very different from $12 in 2026. So you need to adjust this number for inflation. So if you adjust for inflation, $12 a barrel in 1973 is equivalent to $80 a barrel in today's money. Now let's take a look at 1979 during the Iranian Revolution. So oil prices increased by 167% to $40 a barrel. And in today's money, that's equivalent to $159 a barrel. And if you look down the table, in 2008, at the peak of the commodity boom, oil prices hit $147 a barrel. Adjusted for inflation, that is $223 a barrel. And this current Iran conflict that we're in right now, oil prices have increased by 94% to $126 per barrel. So I'm not saying that this is not painful, okay? Oil prices are painful. Over in Singapore, we are already paying significantly higher prices for petrol. Our electricity bills are also going up. And I'm sure that's also the same situation in Hong Kong as well. So the pain is real. But what we're going through right now is not unprecedented. The world has experienced oil prices that are way higher than what we are going through today. We have survived $223 a barrel oil prices, and we have also survived a 300% increase in oil prices. So the pain was real, but during every single crisis, we adjusted, we recovered, and then we moved on. So history tells us that markets will eventually recover. But history also tells us that the world after an oil crisis is not always the same as the world before the crisis. So even if the war ends today, the world will not simply go back to its original state before the war. So some things have changed permanently. So what are some of these things that have changed? So number one, the physical supply of energy. So even if the war ends today, it is going to take time for oil markets to normalize because production, it takes time to restart. Ships will not return until it is safe for them to do so. And refineries, they will also need time to restart. So if you add everything up, we're looking at least a few more months of high oil prices. And that's before you even consider the damage that has already been done to energy facilities. So this will also take time to repair. The damage that has been sustained by Qatar's LNG facilities, that's 17% of its capacity. It took direct damage from the war, and they have already said that this is going to take about 3 to 5 years to repair. A peace deal that is going to take place today is not going to reverse all this damage. So energy prices are not going to revert to pre-war levels immediately, even if Donald Trump says the war is going to end today. Okay, so we should be mentally prepared for high oil prices, at least for the next few months. And number two, Iran has now realized that the Strait of Hormuz is an extremely powerful weapon. So what it is doing now, it is exerting control over the strait. It has also been monetizing the strait by collecting about $1 to $2 million for every oil tanker that is passing through. And its leadership has already stated publicly that they will not return the strait to its previous state, which means that energy supplies that pass through the Strait of Hormuz is now going to be permanently more expensive. So the Strait of Hormuz, again, I think it has changed permanently. It is not going to revert to its original state, even if the war ends today. And number three, I think this is the one that matters the most for all of us, because energy prices feed directly into inflation. And when inflation goes up, central banks are going to raise interest rates. And we are already seeing that happening. Inflation is rising across the world, and markets are now pricing in a 50% probability that the Fed will hike its interest rates by December this year. And this is not just about the US. Rate hikes are not a US story. Okay, rate hikes are now a global story because global central banks, including the ECB, the Bank of England, they are all also looking to hike their interest rates this year. So this is the structural reality that we are expecting to happen, even if the war ends today. So inflation is going to stay high, rate hikes are coming. So it does have implications for certain assets, especially those assets that benefit from falling interest rates, like REITs, for example, long duration bonds, your high growth, loss-making tech stocks. So these assets are going to be under significant pressure in a rising interest rate environment. But having said that, okay, rising interest rates are generally bad for equities, but does that also mean that there is nothing to buy in equity markets right now? No, there are in fact lots of opportunities, even if there is inflation, even if there are rate hikes. And let me share with you some of these markets that we are positive on. Now, most of the markets that we're positive on are in Asia. Asia is where we think the opportunities are in equity markets. Now, when the Iran war started, okay, the consensus view for Asia was that Asia is going to be hit the hardest because Asia imports most of its energy. So higher oil prices means higher costs for companies, higher inflation, and also slower growth for Asia in general. So Asia was supposed to be it was supposed to be the region that's going to suffer at the start of this conflict. But fast forward to today, look at what's happening to Asia right now. Okay, if you look at this slide, okay, I've collated some economic data from across several Asian countries. So Singapore, exports up 15.3% in March. Okay, that's the 7th straight month of growth. Semiconductor exports up by close to 114%. And then look at Korea, exports up by 48.3% in March. And I want to emphasize that this economic data by Singapore and South Korea was produced in the month of March. And if you can recall, March was the time when the worst of the crisis took place. March was also the time when the Strait of Hormuz was effectively closed for the entire month. But despite that, Singapore, Korea, they have produced very impressive economic data during this time. And look at Samsung. Samsung's operating profit was up 750% year on year. Okay, this is not a typo. It is 750%. And if you look down, China, first quarter GDP, it came in at 5%, beating consensus. But 5% is not the number that I want everyone to focus on. What I want everyone to focus on is its clean energy exports, like EVs, batteries, and wind turbines. So these are all rising very strongly. So China is benefiting from the rush to install clean energy technology all over the world, and it is now showing up in its GDP data. And then there's Japan. The Nikkei hit multiple all-time highs in April and May, fully recovering from the losses that it has incurred during the war. And this is why we like Asia. Asia is producing this kind of impressive performance in the middle of the crisis. And over the next few slides, I'll be going through one by one some of the specific Asian markets that we really like right now, starting with the sector that perhaps everyone has been talking about over the past few weeks, which is semiconductors, and specifically Asian semiconductors in South Korea and Taiwan. Now, the reason why we like them is because they are irreplaceable. TSMC, Samsung, and SK Hynix, these companies are the manufacturing backbone of the global semiconductor industry. NVIDIA can sell all the chips they want, but eventually somebody has to help NVIDIA to manufacture all its AI chips. So who are these manufacturers? It is companies like TSMC, it's companies like Samsung and SK Hynix. If you look at their dominance in the global semiconductor supply chain, Samsung and SK Hynix, they control approximately 80% of the global the high bandwidth memory production. TSMC, it controls roughly 90% of the world's most advanced semiconductors. So there is currently a shortage of manufacturing capacity across the whole industry, but even NVIDIA has no choice but to rely on them. Why? Because there is simply no other alternative. They are fully booked for 2026, and the shortages in the semiconductor industry are expected to persist until 2030. So if you are a business owner and if you want to buy semiconductor chips right now, it's either you pay up or you queue up. And that is why these Asian semiconductor companies, they have such strong pricing power. And just because there is a war, just because the Strait of Hormuz is closed, these new developments is not going to change the fact that these Asian semiconductor companies, they are irreplaceable. They are dominant in the global semiconductor supply chain, and they have strong pricing power. The war is not going to change that. And that's only for the supply. If you look at the demand, the hyperscalers like Microsoft and Google, they are spending big on AI. They are spending $725 billion on AI capital expenditures this year, and that's up by 77% from last year. And every dollar of this spending is going to flow through Samsung, SK Hynix, and TSMC in terms of more chip orders. Even companies like Intel reported better than expected earnings during their latest earnings results. And if you can recall, Intel is actually a struggling company. If even Intel can deliver strong results, then this is a signal that global semiconductor demand is strong enough to benefit even the weaker players. And if you have ever wondered whether AI demand is real or speculative, okay, you can look at many different companies across the entire supply chain and you look at the earnings results, okay? They all point to the same thing, that AI demand is currently very strong. And you can also look at how strong this demand is from the perspective of the losers of this AI demand, companies like Nintendo. So what happened to Nintendo? So Nintendo, they have actually raised the price of their Switch 2 by $50. And the reason why they have to raise the price is because of the shortage in memory chips. So it's not because Nintendo cannot afford to buy chips. Okay, it's because Samsung and SK Hynix, they simply have no manufacturing capacity at all. And which is why Nintendo, they are suffering from a shortage of chips. They can't produce enough Switch 2, and they will have to compensate for it with a price hike. So that is how real the demand is for semiconductor chips. Now, I've talked about Asian semiconductor companies, how we like South Korea and Taiwan, and Japan is also another market that we like within Asia. So if you look at Japan imports about 90% of its energy. So on paper, Japan actually looks very vulnerable. But in reality, Japan has a lot of oil reserves, 250 days of oil reserves. And Japan has also been restarting its nuclear plants. So people in Japan, I think they used to be against nuclear plants in the past because of safety concerns. But public opinion has changed significantly over the years because we've got the Russia-Ukraine war, and then now the war that is happening in the Middle East. So these conflicts have actually driven up energy prices, and these conflicts have also made Japan realize the importance of energy security. And Japan has also been proactively diversifying its energy sources over the past 15 years. Its share of LNG imports from Qatar has actually fallen from 18% in 2012 to 4% today. So Japan has already done the energy supply diversification that every country, that every other country is now starting to do. But the investment case for Japan is something that is entirely separate from energy. For Japan, it has always been about the corporate reforms. The corporate reforms that are forcing Japanese companies to address their undervaluation, the reforms that are forcing them to improve their shareholder returns and to improve their overall profitability. So this is a multi-year story that will continue regardless of the outcome of the Iran conflict. And besides the corporate reforms, Japan's investment case is also about the economic transformation that is ongoing. The economic transformation from deflation to inflation. Japan has a whole generation of workers that have not seen a single wage increase in their entire working lives because wages have been stagnant. But look at what's happening over the past few years. Wage growth has been above 5% over the past 3 years. And the Bank of Japan is gradually raising interest rates for the first time in decades. And that is actually a sign of confidence in the economy. So Japan's economy is transforming for the better, and this feeds directly into domestic consumption and corporate earnings. So again, the structural trends like corporate governance reforms, the economic transformation. So these are multi-year structural changes that do not reverse simply because there is a war in Iran. So the Nikkei 225, it is currently near its all-time highs right now. So one of the questions that I've been getting is, is it too expensive for investors to be buying right now? Are we in bubble territory? Okay. No, this is not a bubble. This rally that you are seeing in the Japanese equity market right now is a reflection that markets are now realizing the true value of Japanese companies. Markets are finally realizing that these corporate reforms are indeed driving real profitability increase in Japanese companies. So this is reflecting the true value of Japanese companies. So this is not a bubble. And the structural trends that we are seeing in Japan is one of the reasons why we like Japan as an equity market. So the next market that we like is China. I think China is one of the most interesting stories in this crisis for a couple of reasons. The first reason why we like China so much is because China is actually one of the most insulated economies in this crisis. There's over 100 days of oil reserves. It also has a lot of coal, renewables, and nuclear energy. And only about 1/3 of its crude oil comes from the Middle East. So they are exposed to the crisis, but for China, it's actually very manageable. And China is also the dominant supplier of energy transition hardware, like solar panels, lithium batteries, and electric vehicles. So every government that is watching the Iran war right now, they are all going to be asking themselves the same question. How do we ensure that the next time Iran decides to close the Strait of Hormuz, how do we ensure that we have enough energy for ourselves? And the answer that most governments around the world are concluding is that they need renewable energy. And who dominates renewable energy? It's China. China makes nearly all of the renewable technology that the whole world is rushing to install right now. So that is a structural demand tailwind that is going to last for years. And number two, AI. AI is fundamentally an energy-intensive business because you need a lot of power to run data centers, and you also need a lot of power to train the AI models. And energy is expensive right now because of the Middle East crisis. And that's where China comes in, because China is the cheapest place on earth to build AI. Its electricity is significantly cheaper, and it's cheap because of the massive investment in renewable energy over the years, and also the fact that China has a lot of domestic coal supply. And I'm not the only one who's saying this. Okay, Jensen Huang has said during Davos in January this year that China has twice the energy production of the US. And that actually gives China a structural cost advantage in the global AI race. So it is not just my opinion. Even Jensen Huang has acknowledged that China has a structural cost advantage in the global AI race. And number three is something that excites me the most for the long term. Okay, the third reason, the domestic champions of China, they are now going global. So China is increasingly a technology leader rather than a follower. They have shown that they are more than capable of innovation, and Chinese companies are already proving themselves outside of China. Look at EVs. BYD has overtaken Tesla in global EV sales in 2025. BYD is now the largest producer of electric vehicles, not just in China, but in the world. And look at China's pharmaceutical companies. China's pharmaceutical companies now accounts for nearly a third of all global licensing deals that are signed by Western big pharma companies. In other words, Western drug companies are increasingly going to China to find their next innovative drug solutions. And why is this important? It is important because all these years, Chinese companies, they have a very strong market share at home, but they have very little penetration in overseas markets. But this is now changing. Chinese companies, they are now starting to make money overseas. And if they are successful, what you potentially see is a huge increase in their long-term profitability. And this is going to be a strong catalyst for the Chinese equity market. Okay, so we like Asia, and I've gone through some of the specific Asian companies that we like. Now I would like to touch on certain markets that we are not as positive, starting with Europe. So Europe is where I want to be, a bit more honest with everyone. We've actually downgraded Europe to neutral during the Middle East crisis. And the reason for that is because Europe imports roughly about 57% of its energy needs. So Europe is directly exposed to rising oil prices. So both Asia and Europe, they are experiencing the same energy crisis. But one of the key differences between Asia and Europe is economic data. So in Asia, I've showed everyone just now that Asia is producing strong economic data. Asia has also produced strong earnings results during the worst month of the crisis. And that's largely because of their exposure to semiconductors, AI infrastructure, and also China. China also has exposure to clean energy technologies. So these are the sectors that are experiencing structural tailwinds. And Europe, on the other hand, if you look at some of its economic data, it's actually not very good. Okay, its PMI has contracted in April, and its second quarter GDP is now signaling a negative growth. So Europe's macro data is pointing in the opposite direction. And what that means for Europe is that certain sectors, such as your industrials, your chemicals, these sectors are going to come under earnings pressure. So the question then is, if Europe is so bad, then why don't we just call for a sell? Why are we still neutral on Europe? So the reason why we are still neutral on Europe is because there are still some sectors within Europe that we like. So one of the sectors that we like is defense. Europe is spending big on defense. And they are spending because not because Donald Trump asked them to spend more on defense. They are spending because Europe has come to the conclusion that they can no longer depend on the US for their security. So defense spending across Europe is now a multi-year story that is driven by policy. So the spending contracts have already been signed. So the earnings visibility for Europe's defense companies is there, it's real, it's going to continue for the next few years. We also like European banks. Now, whenever I talk about European banks, I think most investors, they usually remember the scandals that has happened at European banks. But what people don't realize is that European banks, they have been rebuilding over the years. They have restructured, they have been cutting costs, they have been cleaning up their balance sheets. It was a long and painful process, but their profitability has been going up strongly over the years. And right now, with rising interest rates, the banks are going to be direct beneficiaries of this trend. So financials is one area that we still see bright spots in. And then there's healthcare. People still need their medicines and medical procedures. Demand doesn't just go away because there's a war in the Middle East. And European healthcare stocks, they still trade at a meaningful discount to US healthcare companies. And that is the reason why we're not calling for an outright sell for European equities. Okay, so our stance for European equities is actually neutral. And what does neutral mean for investors? So what this means is, if you do not have exposure to Europe in your portfolio right now, there is no need for you to buy Europe at this point because we think Asia is a better opportunity. So if you don't have Europe in your portfolio, no need to buy. Buy Asia. If you already have exposure to Europe, you don't have to sell everything. Okay, Europe ultimately still provides diversification away from US equities. Okay, and there are also some sectors within Europe that is still expected to do well. But what you can do right now is to consider rotating some of your Europe exposure into Asia, where we think is cheaper and where we also think the opportunities are at right now. Okay, and I also wanted to spend a bit of time to talk about the US. Our view of the US equity market is we actually have an underweight position in the US. And I want to be very clear about what that means. We are not saying that US companies are bad. Okay, in fact, US companies are good. If you look at their earnings results are good. First quarter earnings for the S&P 500 is on track to rise 25% year on year. So this is actually one of the strongest quarters since 2022. And if you also look at the companies that have already reported their earnings, 85% of them have actually beat earnings expectations. So if you look at earnings results, US earnings are good. Okay, but here's the thing. Okay, a large part of that earnings growth, a large part of that earnings, the growth in the earnings is actually driven by tech companies. And that is actually one of the reasons why we do not recommend investors to buy the broad S&P 500 index. Because if you buy the index, you are getting exposure to the tech sector that is doing well. You are also getting exposure to a lot of the other sectors that are not doing as well. So why buy the whole market when you can just focus on the one sector that is the most attractive? And on top of that, the S&P 500, it is currently trading at 22 times forward earnings. And if you compare this to Asia X Japan, which is currently trading at 13.2 times, the US is a lot more expensive compared to Asia. So we're not saying that you should sell all of your US stocks, okay? But what we're essentially saying is that on a relative basis, we feel Asia is more attractive because you can get the same kind of growth in Asia, but at a much cheaper price. And on top of that, energy prices, tariffs, and the prospect of rate hikes, these are all potentially headwinds for the US equity market. So our recommended positioning for the US is to underweight the broad US market, but retain exposure to internet and technology companies because we think technology is currently the most attractive sector in the US right now. More than half of their revenues of tech companies, they actually come from outside the US, which also means that they are largely insulated from any slowdown in the domestic economy. Their earnings momentum is still very strong. AI demand is still very strong, and AI demand is not cyclical. The AI demand that we're seeing right now is structural. And what this means is that the earnings results of tech companies, they're going to be largely detached from domestic economic conditions. And this has also been confirmed by the earnings results. Now, for the rest of your US exposure, if you don't want to be overly concentrated purely in tech companies, then what you want to do also is to consider rotating into quality companies. And this refers to companies with high profitability, strong balance sheets, and earnings visibility. So these are exactly the kinds of attributes that you want in a company when rates are rising and when the macro environment is largely uncertain. Okay, gold. We've actually received a lot of inquiries on gold, especially during the crisis, because everyone was asking, oh, now that there's a crisis, should we be buying gold right now to hedge against this crisis? Okay, so let me just show you how gold did during this war. Gold actually fell 11.7% during this war. When we have this kind of a crisis, gold is supposed to do well. But take a look at what happened. From the start of the war to the ceasefire, gold has actually fell 11.7%. underperforming even the S&P 500, the Nasdaq, and Brent crude oil. So why did this happen? There are three reasons that explain why gold fell so much during the crisis. Okay, the first reason is because bond yields have been rising. Gold is an asset that pays you nothing. So when bond yields rise, gold becomes relatively less attractive. So that's the first reason. Number two, there has also been record outflows from gold ETFs. 12 billion US dollars of outflows in March alone. So if you remember in 2025, everyone was rushing to buy gold. Even your TikTok influencers, they were recommending gold as a very good investment. So it attracted a lot of buyers in 2025. And these are mostly investors who don't really have a long-term investment case for gold. And these are investors who just wanted to chase the gold rally. So when prices started to drop, everyone rushed for the exit. And that was the reason why there was a sharp correction in gold prices. And third, central banks and governments have also been selling gold. Turkey's central bank sold 60 times to defend its currency against the energy shock. And India has also recently more than doubled its import tariffs on gold. And India has also asked the citizens to stop buying gold for at least 1 year in order to preserve foreign exchange reserves. So the institutions that have been buying gold over the years, the institutions that have been helping to support gold prices, so they have also been selling gold during the war. So when the Iran war started, gold was supposed to be the answer to exactly this kind of a crisis. But as we now know, gold has not been a reliable safe haven. So the question that everyone is asking now is, does gold belong in my portfolio? So my answer to that question is, it depends. It depends on what you want gold to do in your portfolio. There is one thing that gold does very well. Okay, gold is good at providing diversification. So if you look at the long-term correlation between gold and equities, it is essentially zero. And what that means is that gold moves differently from equities over the long run. So that is actually a real portfolio benefit. If you look at the 5-year correlation, so the correlation between gold and equities has been going up in recent years, which means that gold has lost a bit of its diversification power over the years, but it is still useful, just that it is less useful compared to the past. So what's our recommendation for gold? If you're buying gold for portfolio diversification, if you want an asset in your portfolio that moves differently from equities, then I believe gold belongs in your portfolio, provided it is a small allocation. Okay, our recommendation for gold allocation is about 0 to 10%, small enough for it to provide diversification. Sorry, big enough for it to provide some kind of a diversification to your portfolio, but small enough for you to be insulated from the very volatile price movement in gold prices. Okay, and I want to emphasize also that gold is for diversification, not for capital protection, not for crisis hedge. If you are looking for something that can preserve its value when markets are volatile, then I think money market funds, short duration bonds, these are still the better options because they pay you income. And when they mature, you're able to reinvest the proceeds at whatever the current interest rate is. So in a rising interest rate environment, that is actually an advantage. It gives you income, and it also carries much less risk compared to gold. So buy gold only if you want portfolio diversification. If you want capital protection, if you want to hedge against a crisis, go for money market funds and short duration bonds. So to sum up my sharing today, I think there are 3 things that you can do to your portfolios right now. Okay, so the first thing that you should do right now is don't panic sell. Oil prices are high, rate hikes are coming, the conflict may escalate. But if you look back at all the crises that the world has been through over the past 50 years, markets have always recovered every time. And you don't even need the war to end in order for markets to rally. We have already seen that in April when markets rebounded strongly. And if you look at the Russia-Ukraine war, has it ended? No, they are still fighting. But markets have moved on from the conflict a long time ago. So don't panic sell. Okay, stay invested in markets. And the second thing that you can do right now is to reposition your portfolios. So within equities, underweight the US, add to Asia, and hold Europe selectively. And for fixed income, rotate into short duration bonds. I've talked about gold just now, but I want to emphasize that gold is entirely optional. But if you must have gold inside your portfolio, then hold it as a form of portfolio diversification, not as a safe haven, and make sure that your gold allocation, you keep it small to a maximum of about 10% of your portfolios. And last but not least, invest using a regular savings plan. Don't try to time the market. Okay, Asia is attractive right now, but we're also not telling everyone to go all in immediately. So you don't have to own everything by today. Okay, and there are also some investors who are uncomfortable investing a huge lump sum when market conditions are still relatively uncertain. And I think that's a legitimate concern. Okay, if you're concerned about volatile market conditions, that's where RSP comes in. You can slowly build up your exposure to Asia using RSP. It's a very systematic and a very disciplined way of building long-term wealth. And this slide over here is evidence on why you should do RSP today. So this table that you see over here is actually based on 6 major crises over the past 50 years. And the returns that you see here are for a hypothetical investor who started a monthly RSP into the S&P 500. And the assumption was that this investor started the RSP just before the crisis happened. So in other words, this investor started his RSP at the worst possible time. So what do the numbers tell us? So after 1 year, okay, you can see that returns were still negative in 3 out of the 6 crises. And I'll be honest with everyone, recoveries take time. And investing through a crisis, it does require some patience. Okay, so if you invest in Asia right now using RSP, after 1 year, there is no guarantee that you will be able to make money. Okay, you need some patience when it comes to long-term investing. But look at what happens after 3 years. By the 3-year mark, every single crisis showed a positive return. No exceptions. And for investors who stayed invested for 5 years, their returns will range from 13.5% to 53.5%. So the key takeaway from this is that even if you start your RSP at the worst possible time, history shows that you can still make money if you give it about 3 to 5 years. And this is not even my subjective opinion. Okay, this is not my opinion. This data that you see here is based on 50 years of data across 6 crises. Okay, so this is concrete data that we took over the past 50 years to show you that RSP works in all kinds of environments. And the best thing about RSP is that you don't even need to do anything special. You don't need to have finance background. You don't even need to know investment research. All you need to do is to start an RSP, stay disciplined, and make sure you don't terminate the RSP. So now markets are currently worried about rate hikes, rising bond yields. We have seen a bit of a pullback because of rising bond yields across the world. But let me just take this opportunity to remind everyone that we have been through this exact same situation before. We have been through rate hikes. We have also been through rising bond yields. And the most recent example that I want to point out was in 2022, when the Fed delivered its most aggressive rate hike in 4 decades. So during that year, the S&P 500 was down by about 18%. So it was a bad year for equities in 2022. But look at what happens in the next 2 years. The S&P 500 delivered returns of 26.3% and 25% in 2023 and 2024 respectively. So this is one of the strongest 2-year recoveries in a generation. So again, my emphasis is don't panic, stay invested. If you already have an RSP, keep going, don't terminate it. Okay, this is exactly the kind of environment where RSP works best. If you are not on RSP, then I honestly think that now is the best time for you to start investing. So this hypothetical investor that I showed everyone today, so he started at the worst possible time, but he is still able to make money after 3 to 5 years. If he can achieve this kind of performance, then you definitely can do better just by starting now. Okay, so with that, I end my sharing today. Thank you so much for your attention today. And right now, I'll just pause to see if anyone has any questions for me. Fantastic, no questions. Hopefully this has been a very insightful session for everyone. So with that, I'd like to just hand the time over to Gordon, who will take over the next session. Gordon, over to you.
Okay, thank you so much, Weiren. This is the insightful macroeconomic outlook and for reminding us how to stay disciplined in the fast-moving market. 咁好感謝剛才微軟嘅精彩分享啦，咁相信大家對跟住落嚟咧點樣保持呢一個投資紀律啦，同埋點樣做一個資產配置，咁都有更清晰嘅部署㗎啦。咁接住落嚟咧就進入我哋嘅第二部分啦，咁有請我哋 iGM Hong Kong 嘅高級投資顧問哥頓，咁佢陣間咧就會用廣東話為大家拆解點樣去打造收益嘅趨勢、債券及基金實戰嘅策略。咁喺而家咁波動嘅市況底下，咁到底我哋可以點樣利用固定收益嘅產品去固定呢個回報呢？ Next, we will move to the second part of today's session. Please welcome our senior investment consultant from iGM Hong Kong, Gordon. He will be sharing in Cantonese and walking us through the Income Edge product playbook for bonds and mutual funds. 咁事不宜遲，我哋有請 Gordon，唔該。
好，唔該晒主持人。咁大家好啦，都好歡迎大家今日嚟參加我哋嘅呢一個講座啦。咁頭先咧，可能大家都聽到咧，我哋新加坡研究團隊咧，其實都同大家分享咗我哋對可能大家比較關注嘅一啲投資議題啦，包括頭先大家聽到原油價格啦，近期一定係大家最關心嘅。咁或者甚至去到黃金啊，或者係各地睇好甚至睇淡嘅市場咧，都希望大家去了解多少少我哋 iFAST 嘅一啲研究嘅觀點啦。咁接住落嚟，大家可能第一時間就會諗，咁我聽咗好多觀點咯喎，咁除咗啱啱微軟又同大家分享可以做一啲嘅即係叫分散投資嘅一啲方案之外咧，咁有冇啲具體嘅產品其實可以值得大家現階段喺第三季嘅前夕咧，再去多啲留意少少，或者提前就位部署多少少咧？咁所以一啲 action call 咧，咁接住落嚟咧就我會同大家去分享一下啦，特別係透過一啲嘅債券啦，或者係一啲互惠基金，可以做到其實廣泛地做到一個簡單而且係進取或者係豐儉由人嘅涉獵，咁所以事不宜遲，咁就入我哋個簡報啦。好，咁咧大家可能畫面上高咧，咁先去做一個簡單嘅引入啦。其實啱啱可能微軟嘅部分咧，咁用英文咧同大家分享咗一個好詳盡嘅我哋嘅市況嘅睇法。咁做一個簡單嘅中文嘅小總結咧，就係其實我哋整體咧 iFAST 個研究團隊咧，針對住今年嘅年度嘅展望咧，都係針對住個亞太地區嘅市場，我哋比較睇好啦。咁包括係中國嘅股市、A 股、港股啦，咁或者係甚至睇到日本嘅一個中長線嘅結構增長咧，其實都係一啲好明顯嘅催化劑。咁或者去到如果大家話想進取少少喎，特別近期見到人工智能熱潮，咁但係同時又想規避翻美國嘅估值過高嘅問題咧，咁其實亞洲科技係一個幾好嘅一個臨界點去入場啦。咁或者如果去到諗債券方面嘅部署咧，咁我哋現階段大家見到市況其實都比較動盪啦。最新其實見到 CPI 即係個消費者嘅物價指數咧，其實按年嘅增長咧係高於市場預期，咁所以都引申到咧大家可能市場上咧係計劃緊 pricing 緊咧今年年內咧未必見到會急劇減息，咁所以現階段啦喺一個 higher for longer 嘅一個情況底下咧，咁我哋都係偏好投資級別啦、高評級嘅債券都係我哋現階段嘅優選啦。咁至於去到可能有啲 selective 去睇得謹慎少少嘅板塊，歐洲啦，啱啱微軟同大家分享咗，例如可能係國防啦、金融啦、醫療等等呢一啲嘅傳統歐洲做得比較好嘅一啲防禦板塊咧，可以值得大家多留意啲。咁但係你話係咪要全面進場落去歐股咧？咁現階段睇唔到係一個最理想嘅時機。咁同埋對比之下啦，啱啱債券咁，我哋因為偏好翻可能高評級嘅債券，喺現階段啲投資級別債券做到相對個性價比，考慮到個信貸風險啦，同時個收益率嘅情況底下咧，咁相對之下咧，高收益債券嘅吸引力就冇咁高啦。咁同埋黃金啦，我哋都有個比較鮮明嘅觀點啦，我哋覺得係相對要謹慎少少睇啦。短期嘅炒賣嘅嗰個熱潮風氣，其實會唔會係即係會其實都體現到係中長線個增長空間冇市場預期咁高咧？咁個避險嘅定性係咪真係市場現階段咁青睞、咁前景咁明朗咧？咁我哋相對睇得會比較謹慎少少。咁同埋啦，啱啱開場提到個估值嘅問題咧，現階段見到普遍嘅美國股票咧，估值係相對比較高啦。咁除非話個前景係特別明朗嘅板塊咧，咁我哋現階段都唔係話咁建議大家可能全面進場或者加大個注碼喺一啲廣泛涉獵嘅美國股票嘅一啲產業上高。咁所以另外咧，我哋整體即係可能喺一啲部署上高啦。啱啱開場講債券啦，或者基金啦，甚至其實我哋 iFAST 有一個 DPMS， 亦即係 Discretionary Portfolio Management 嘅 service， 可以幫大家咧做到一籃子簡單而唔使話真係親自大家去揀股、揀債、揀基金嘅一個部署。咁所以接住落嚟都會用少少時間同大家去簡單講一講。咁 咁另外先講債券啦，其實現階段咧，我哋都普遍有唔少嘅客戶咧係會關注睇緊啲美國國債啦，或者一啲高評級嘅企業債。咁好似啱啱講啦，咁美國國債學術上高咧定性咗係一個 risk-free 嘅 asset 啦。咁其實都唔係話即係空穴來風，係有個學術上嘅定性。咁所以變相咧，大家都可能會諗點樣去鎖定利率啦，或者係針對住可能銀行嘅定期存款個利率唔係咁吸引喎。咁有冇啲同類型風險較低嘅產品可以做到相應嘅涉獵咧？去鎖定個息率咧，咁美國國債啦，或者一啲高評級嘅企業債就幫到大家。咁另外或者去到一啲基金啦，即係啲 mutual funds 互惠基金咧，咁股債上高咧都可以做到廣泛嘅涉獵。咁大家可能成日會諗，咁我揀股票或者係我就咁睇個行業前景，睇好間公司我就去買股票。咁但係睇好個產業，特別現階段 AI 個熱潮或者係晶片嗰個需求強勁底下咧，咁大家都會諗會唔會揀一啲基金去做啲廣泛嘅涉獵，去規避翻個揀錯股嘅風險咧。咁互惠基金喺股債上都幫到大家做涉獵啦。咁另外或者我哋其實 in-house 我哋 iFAST 嘅 DPMS 嘅一個全權委託嘅投資組合管理服務咧，其實都幫到大家可能唔同嘅風險取向啦。例如我想係保守啲嘅，或者我想進取啲咧，其實都可以去揀到唔同嘅一啲風險嘅取向嘅組合。咁所以呢一方面就係一啲我哋覺得叫做 action call 或者現階段大家可以做嘅一啲部署咧，係值得大家去參考一下。咁借呢個機會咧，同大家分享一下，其實我哋嘅債券團隊啦、固定收益團隊咧，都篩選咗一啲我哋覺得現階段係值得大家多留意嘅債券。咁啱啱提到啦，美國國債 risk-free asset。咁其實現階段咧有唔少嘅投資者話，其實對我哋嘅研究團隊都覺得咧可以做一啲我哋叫做 barbell strategy，即係一啲槓鈴嘅策略啦。咁其實好直觀地諗咧，就係以一個槓鈴或者一個啞鈴，咁其實就係左右兩邊有 weighting 啦。咁所以變相咧，短年期嘅同埋長年期嘅都可以各配置少少。咁短年期呢個波動性咧，或者個價格上高睇會相對比較低啲啦，個 price sensitivity 會相對比較可控。咁所以喺短年期咧就係可以幫到大家做一個權衡 reinvestment risk， 即係咦咁個市況動盪又如何咧？咁如果係即係個市況唔理想，咁我可以持有到期啦，年期都唔會特別長。咁但係如果話個可能市況比較理想，我都可以提前去套現，可能轉頭個股票市場去加注啦。咁所以個靈活性喺度。咁但係與此同時咧，其實長年期嘅債券咧都有一定嘅投資價值啦。咁其實現階段啱啱講到鎖息嘅效果咧，特別係大家會諗到後市去做部署。咁今年啦，可能我哋 iFAST 個研究團隊覺得唔太可能喺2026年會見到減息啦。咁但係如果話真係3至5年起跳之後去諗，咦咁如果真係步入一個零息環境，通脹可控咧，其實有冇啲辦法去鎖定現階段個利率咧？咁到時零息環境可能揾張真係債券，可能係真係1厘2厘嘅年化收益率。咁現階段做咧就可以鎖定大概4點幾5厘嘅年化收益率啦。咁所以兩邊各做部署咧，其實係一個好可持續嘅一個策略。咁另外可能大家想再進取啲，咁可能我唔想要美國國債，或者大家可能喺唔同嘅渠道都買過啲美國國債嘅，咁企業債券係值得大家去留意啦。咁一啲知名嘅發行人，例如係匯豐啦、渣打銀行啦等等咧，其實都發咗一啲相應唔同嘅企業債券咧，去俾大家認購。咁其實大家畫面入邊咧，見到個買入嘅收益率咧，都相對比美國國債係會理想啦。咁其實都會跟翻本身個定性係企業債券啦。咁個企業債券普遍個信貸風險咧，都會比一啲主權債券高。咁所以個 risk return 個 trade off 權衡翻之後咧，咁見到個年化收益率咧，都可能近期可能去到過5點幾、5.78啦，大家都見到有個別嘅債券其實做到呢一個嘅年化收益率。咁或者大家除咗啲金融嘅發行人嘅債券之外咧，咁有啲能源嘅行業啦，或者科技債券咧，咁大家成日可能會諗，以可能 Max 7即係科技七雄咧，其實個股票個估值相對比較高喎。咁我同時想捕捉到個科技產業嘅一個即係紅利，咁其實啲債券都同樣做到啦。因為一方面見到啲公司嘅前景轉得比較理想咧，咁我哋都會諗到佢嘅償債能力有整固啦。咁所以例如係一啲 Alphabet 啦、Microsoft、微軟等等咧，其實都有啲相應嘅債券咧，值得大家現階段去多睇少少，去做一啲相應嘅部署嘅。咁所以啱啱提到啦，其實喺美國國債咧，我哋個研究團隊有個觀點就係覺得大家可以做一啲 barbell 嘅 strategy 啦，即係短年期同埋長年期各配少少咧，咁可以做到進可攻退可守啦。短年期就幫大家維持個資金嘅流動性嘅一個效益啦，咁同時長年期嘅債券咧就可以幫大家做到鎖定息率個效果。咁所以畫面入邊咧就係其中2張喺我哋個平台上高大家可以認購到嘅美國國債啦，大家見到可能2027年5月就到期嘅，其實嗰一張 張嘅美國國債個買入收益率就大概年化嚟講咧3.76左右啦。咁但係如果睇中長期嘅，咁我想鎖定4厘樓上嘅息率咧，其實見到有啲可能去到2036年2月份，即係可能過大概10年左右嘅時長嘅一啲債券咧，其實都幫大家做到鎖息嘅效果。咁企業債券啦，啱啱見到一啲嘅即係更多一啲收益率上高嘅資料同大家分享下啦。可能啱啱大家可能會直白諗，咦4厘幾好似唔係真係咁理想喎，我想再進取啲。咁其實例如匯豐嘅債券咧，其實我哋見到例如2030年到期嘅債券咧，現階段個收益率咧都做到去到5.78%。咁所以呢一啲都係我哋覺得值得大家去參考嘅一啲嘅債券嘅部署啦。咁特別大家會問到咧，其實點解銀行債券即係可能值得大家會去做個部署咧？咁其實畫面入邊見到個配置邏輯嘅中間嗰點咧，大家見到有寫巴塞爾協定啦。咁其實講多少少咧，就係巴塞爾協定嗰個緣由咧，就係經過咗2008年金融個風暴嘅情況底下咧，其實有啲環球嘅監管機構就訂立咗呢一個嘅巴塞爾協定咧，去規管一啲高梯隊或者知名度高嘅銀行咧，去維持更高嘅一個 Tier 1嘅即係流動性嘅要求，去確保佢哋嘅償債能力係充裕啦。咁所以變相大家就會直觀諗到，即係受到更緊嘅監管要求咧，去維持手頭上充裕嘅資金去償還相關債務。咁所以變相個償債能力咧，我哋覺得呢啲金融機構咧，整體嚟講手頭嘅資金嘅充足率啦、流動性咧，都係足以去償還佢哋嘅債務嘅。咁啱啱就提到啦，額外多少嘅資料，咁唔喺度同大家敘述啦。咁有啲嘅科技嘅債券，咁如果大家有興趣想了解多啲，都可以之後起落嚟 Chatbox 啦，或者我哋個 Seminar 之後咧，同大家嘅財富顧問去相關了解多少少嘅。咁所以有啲嘅 sample 嘅投資組合俾大家嚟睇下啦，點樣去構建一個可能係過5厘嘅一個年化收益率嘅債券組合咧？咁有啲額外嘅資料同大家去分享下，例如包括用一啲嘅企業債券啦，去再平衡翻一啲嘅美國國債嘅一啲降齡嘅投資策略，其實做到一個債券嘅投資組合咧，可以幫大家做到年化5厘嘅一個投資組合嘅。咁講咗比較多債券啦，咁我哋 move 翻去講下基金啦。咁其實我哋嘅研究團隊咧喺 iFAST 現階段咧都上架超過咗2000幾隻嘅互惠基金啦。咁大家覺得已經眼花繚亂喎。咁我哋嘅研究團隊咧幫大家 trim down 收窄到可能幾隻嘅一啲我哋覺得焦點基金，或者喺現階段2026年值得大家去睇多少少嘅基金啦。特別我哋啱啱研究團隊咧同大家分享咗，咦咁亞太地區係我哋比較睇好嘅區域，或者可以值得2026年去多少少配置嘅一啲區域咧，其實見到例如畫面右手邊比較多一啲亞洲嘅股票市場嘅基金啦，咁包括例如係富達啦，其實都有啲日本嘅價值基金，或者係摩根即係 JP Morgan 嘅旗下咧都有個太平洋嘅科技基金啦，或者去到 Allianz 安聯咧都有個 China Tech 中國嘅科技股票嘅產業集中投資嘅基金策略，或者甚至我想揀 Global 嘅一啲晶片嘅半導體相關概念嘅，咁都有一啲相應嘅策略嘅。咁逐一同大家介紹下啦，例如係PIMCO 咧，其實都有一隻叫做Income Fund，即係收益基金。相信咧，如果大家買過基金咧，對呢一隻嘅基金都唔係特別陌生啦，因為都係環球以資產規模嚟講咧最大嘅一隻主動型管理嘅債券基金。咁主打咧就係賣佢嘅 underlying，即係持股咧，其實就係賣一啲嘅美國國債，或者由一啲美國政府抵押嘅一啲嘅按揭相關證券啦。咁所以整體嚟講咧，個投資組合都係維持緊個信貸評級係 Double A 嘅區間，即係跟住美國政府嘅主權評級。咁同埋咧都持續做到個6厘樓上嘅派息啦。即係可能大家如果有買開港股，都成日會想揾一啲可能固定嘅收息股啊。咁其實呢一啲基金咧都做到相應嘅類似效果啦。即係每個月份，甚至可能比一啲每個季度派息嘅策略更加流動啦，提供到持續嘅現金流。每個月咧都有啲入息可以帶到大家入個現金帳戶度。咁所以呢一隻嘅基金咧都比較喺我哋平台上高唔少客戶係青睞同埋受歡迎嘅，以保守型嘅策略嚟講。或者到債券基金咧，咁有啲可能近期啦，其實市場上都持續都會留意緊，可能嚟緊今年唔會減息喎，咁大家會望多少少啲短存續期嘅債券嘅策略嘅。咁所以其實嚟安本啦，其實都有一隻嘅短期嘅收益債券基金啦。其實主打就係靠低波幅，整體一個持倉都係以一啲短年期嘅債券為一個核心嘅。咁其實見到個存續期喺佢哋嘅基金策略入邊咧，都係維持緊1.5年樓下啦。咁大家可能都買過債券好熟知嘅，咁越個年期越短，咁整體個價格嘅波動就越低啦。咁所以喺一啲嘅環球嘅市況動盪嘅時候咧，咁往往呢一啲嘅短存續期嘅債券基金咧，個表現都會比普遍嘅大市咧嚟得更加穩健。咁所以同樣啦，喺年初至今咧，其實以債券嘅收益率嚟講咧，都跑贏咗一啲同類型嘅基金。咁所以值得大家去睇多少少。咁或者如果大家想揾一啲高派息少少嘅，咁我直睇每個月嘅入息嗰個現金帳戶想多少少嘅派息嘅話咧，咁可以望下畫面右手邊嘅一啲高收益嘅債券基金啦。咁其實 英士曼都係隻做得唔錯嘅一個高收益債券基金。咁顧名思義啦，咁佢底下嘅持倉咧就係買一啲高收益嘅債券，即係整體嚟講個信貸評級可能相對唔係話最高，咁但係咧普遍個票息啦或者個年化收益率咧都可以做到嚟6%、7%嘅一個嘅年化收益率。咁同埋我哋研究團隊都做過比較啦，即係以英士曼嘅策略咧，其實對比可能其他嘅高收益債券基金咧，嗰個債券違約率即係還唔還到錢個問題，整體相對可控，即係個違約率咧可能去到0.00幾%嘅一個投資組合咧，其實整體嚟講都體現到喺佢個穩健嘅基金表現入邊。咁或者大家除咗債券基金之外啦，咁都會想揀一啲可能靈活啲嘅，想揀一啲multi-asset 嘅，即係股債嘅混合基金咧。咁同樣可以睇下嚟 PIMCO 咧有一隻叫做收益增長基金，叫做 Balance Income and Growth Fund 啦。咁其實都係一個好傳統同好經典嘅60-40比重嘅股債混合基金。咁股票嘅組合咧就係買得比較多一啲嘅美國七雄啦，即係大家熟知嘅，例如係Microsoft 啦、Nvidia 等等嘅一啲科技巨企嘅股票啦。咁再混合一啲嘅例如 PIMCO Income 嘅組合。即係包括係美國國債或者係由美國政府抵押嘅相關嘅按揭證券嘅組合咧，咁所以都見到佢整體嗰個嘅表現咧都做得唔錯。咁同樣都係主打派息啦，即係每月大概派到近7%嘅一個息率咧，其實可以幫助到大家個現金嗰個嘅管理咧，其實持續都有個入息嘅狀態。咁另外可以講多少少就係股票嘅基金啦。咁因為其實我哋 iFAST 嘅研究團隊咧都持續睇好日本嘅股票市場。咁例如見到東證改革啦，或者係其實日本個薪資增長咧，其實都有個好顯著嘅轉向。咁所以咧，例如包括富達咧 Fidelity 都有隻做得比較理想嘅一個日本嘅股票基金啦。咁主打咧就係會做 unconstrained 嘅 strategy，即係大家可能會例如買一啲嘅 ETF，咁往往會可能會大家諗，咁可能追蹤指數，亦即係意味住咧其實個持股啊或者個 underlying 個 exposure 咧都係跟住指數去走，咁大家往往可能睇好嘅一啲公司咧，就冇辦法做到集中性嘅配置。咁富達咧就係採取一個叫做冇約束、不受價值、不受價限嘅一個投資策略啦。咁基金經理覺得，咦，可能一啲嘅金融股票、上市企業或者可能股神巴菲特比較青睞嘅啲上市公司，其實如果想做到集中型嘅配置咧，咁呢一啲嘅互惠基金咧就做到呢一個效果。咁所以呢一方面都係我哋覺得，即係呢隻基金起例如咁多隻上架嘅日本股票基金咧，我哋覺得個表現啦、抗跌能力啦，或者考慮埋個基金費用咧，整體比較理想嘅一個策略。咁或者大家想買一啲亞太地區嘅科技股票，或者我先前個持倉比較多啲美國嘅科技股，我想做下 balancing，我想權衡下 diversify 下，即係唔將所有雞蛋擺喺同一個籃子入邊咧。咁可以睇下畫面右手邊，即係摩根太平洋嘅科技基金啦。咁主打就係買啲台灣嘅股票，買啲韓國嘅股票、日本股票同埋中國嘅股票啦。咁整體咧都係比較集中喺科技嘅產業。咁大家如果例如睇多少少佢核心持倉咧，都見到唔少唔陌生嘅名。咁例如包括係 Samsung 即係三星啦、台積電啦，或者去到騰訊啦、阿里巴巴等等呢一啲嘅知名度高同埋同時係啲科技巨企嘅一啲公司。咁所以都唔會話真係去到一啲可能個波動太高嘅一啲中小型嘅股票。咁所以都係一個簡單同埋直接可以做到 Asia Tech Theme Play 嘅一個 strategy。咁去到後面少少啦，就係可能如果大家話咁 Asia Tech 咁買得比較廣泛喎，我自己比較睇好 China，比較睇好個中港股市咧，咁安聯都有個相應嘅策略啦，主打就係可能集中去買一啲中國嘅科技股票，同時可以捕捉到例如係中國內地市場嘅創科板塊嘅一啲可能新嘅 IPO 啦，其實都同樣可能以企業投資者嘅角度先至做到嘅一啲嘅 exposure 咧，咁同樣都係透過買基金可以捕捉到啦。咁或者去到如果 global 嘅近期我哋覺得 year to date 即係年初至今做得比較理想，有宏利環球嘅一個半導體基金啦，咁主打可能買一啲晶片相關，例如可能大家比較熟悉嘅AMD 啦，或者我哋啱啱研究嘅團隊有提到 Intel 啦等等呢一啲公司，可能相對嚟講可能嗰個嘅半導體嗰個集中性咧更加高，對比主流嘅科技基金可能會買一啲嘅例如 software 相關啦、infrastructure 相關啦、hardware 相關等等。咁呢一隻咧就係做 global 嘅 semiconductor focus 嘅，咁見到個核心持股咧同 semiconductor 嘅關聯性咧入邊都過70% 嘅資產咧都係以半導體為核心嘅公司。咁所以呢一系列咧都係我哋個研究團隊覺得值得大家喺呢一個季度啦，或者2026年咧去睇多少少嘅一啲基金策略。 咁另外都用少少時間講一講，其實我哋 iFAST 嘅一個全權委託嘅投資組合管理服務啦 ，DPMS。咁其實大家可能啱啱聽完，咦咁多債券、咁多基金，咁我真係唔想揀喎，不如我就冧心，我交俾一個專業團隊去管嘅話咧，咁其實我哋都有呢一個服務啦，幫大家做一個環球分散嘅投資組合。咁其實自現今啦，其實我哋由15年成立咧，都成立咗超過11年啦嘅一個嘅基金組合啦。咁其實見到入邊咧都有5種嘅風險取態嘅。咁其實做例如可能大家如果想保守啲嘅，咁我哋可以allocate多少少喺債券嘅上高啦。咁其實都係一個好 standardize， 即係一個好規律嘅一個嘅系統性嘅組合。咁有5種嘅風險取態俾大家揀啦。咁如果大家想保守類型嘅，咁你見到入邊個持倉係90%係債券嘅一啲嘅即係固定收益嘅一個持倉啦。但我想進取嘅，咁我可以買90% 嘅股票嘅一個 exposure。咁所以大家可以根據翻大家一個風險取態咧，去揀自己相應想揀嘅一個投資組合。咁其實畫面底下咧都有個即係年度化嘅回報啦。例如大家可能舊年如果買一個 single 嘅地緣嘅一個即係單一嘅地區嘅話咧，可能唔一定可能會揀到最 upside potential 最大嘅一個地區。咁但係反觀咧，如果去一籃子，可能我話10萬蚊、20萬港紙咧，已經可以做到個 global 環球嘅投資組合咧。咁同時可以捕捉到例如舊年跑贏大市嘅韓國啦、台灣股市等等咧。其實呢一啲咧就係比較簡單，同時可以容許到小面額投資咧，去捕捉到環球嘅一個資產捕捉嘅一個策略。咁所以呢一方面咧，同大家借呢一個機會咧，喺呢一個場合同大家分享一下。咁有多少少表現嘅一啲數據俾大家睇啦。例如大家見到咧，其實過去3年嘅一個累計回報咧，例如以進取型嘅投資組合咧，其實已經可以幫大家做到50% 以上嘅一個資產增值。咁往往大家例如可能買單一嘅市場，咁當然賭啱嘅話咧，個賭博成分比較重啦。如果買啱嘅，咁其實可能會個資產增值都顯著。咁但係如果真正想做可持續嘅投資，同時可能規避翻或者降低喺環球跌市入邊嘅波動，特別喺舊年大家見到例如係關稅一役啦，或者今年其實見到近期嘅一個美伊衝突咧，其實持續都有不穩定因素，甚至最新習特會之後嘅一啲談判嘅後續咧，其實往往都會為個市場帶嚟一啲短期嘅股市波動。咁想降低呢一方面嘅對資產帶嚟嘅波動性咧，咁往往呢一個環球類型嘅一個配置咧，就可以做到呢一個效果，同時可以捕捉到個增值嘅空間。係啦，咁所以另外都同大家分享下我哋個DPMS 即係個全權委託投資組合管理服務入邊咧，其實做咗啲咩嘅舉動咧？即係一啲嘅我哋嘅基金經理團隊其實做咗啲咩嘅調倉咧？咁首先就係根據翻我哋啱啱同大家分享我哋嘅 house view，其實比較睇好個亞太地區啦。咁我哋加持咗日本啦，加持咗亞洲啦，同埋加持咗喺 digital economy 即係數碼經濟上高產業嘅一啲持倉。咁另外我哋因為都偏好翻，即係現階段其實見到個短存續期嘅債券。其實整體喺個環球市況動盪嘅情況底下咧，都會個投資嘅價值會相對比較高。咁同樣我哋都增持咗啦。咁我哋維持翻 neutral 嘅一啲 allocation，就係歐洲啦、新興市場啦或者亞太地區嘅投資級別債券。咁我哋維持翻唔變嘅一個投資嘅補充嘅一個比重。咁另外減持嘅部分咧，就因為我哋見到美國嘅估值相對比較高啦。咁我哋就將美國嘅資金轉去多少少擺喺亞太地區嘅，特別係針對住科技板塊嘅一啲策略啦。咁另外高息嘅債券，咁我哋都 trim down 咗個 allocation 啦。唔單止係亞洲，咁環球同埋美國嘅高息債券嘅比重咧，我哋近期都係下調咗，去轉投相應嘅資金咧落去我哋比較睇好嘅一啲亞太地區嘅股市。咁所以做個簡單嘅一個小總結啦。咁其實希望今日呢一個嘅分享咧，同大家都涵蓋到，例如債券啦，其實我哋有唔同嘅精選債券。咁另外個基金上高咧，都可以針對住個亞太地區嘅股市做到個部署啦。或者好似啱啱重複講，如果大家唔想係自己親自去揀債券、去揀基金嘅，咁我想一籃子做個 global 簡單可以一站式嘅一個投資組合嘅話咧，咁我哋嘅 in-house 嘅 DPMS 管理組合咧，就可以幫大家做到呢一個效果。咁所以如果今日個分享咁個時間就大概到呢一度啦。咁如果大家想了解更多嘅資訊咧，記得唔好猶豫啦，同大家嘅理財顧問咧去聯絡翻，攞翻相應嘅一啲資料做參考。咁我時間大概到呢一度，咁我將時間交翻俾阿主持人。
咁最後啦，咁我都喺度多謝翻微軟啦，同埋哥頓今日嘅專業嘅分享啦，亦都好多謝見到咁多位嘅觀眾去參與我哋今日呢一個 session 嘅。喺離開之前咧，咁有2個好重要嘅事都想提一提大家啦。第一，咁如果大家想重溫翻今日咁精彩嘅內容，或者想 share 翻俾啲朋友睇嘅話，咁可以訂閱翻我哋嘅 YouTube channel 啦，iFAST HK 逆風香港。 咁今日講座嘅精彩重溫啦，咁之後都會喺呢一個活動之後啦，咁就會 upload 翻去我哋 YouTube channel 啦。咁另外啦，咁畫面入邊咧都仲有一個 QR code 啦，咁就係今次 webinar 嘅一個意見表啦。咁無論你對今日嘅講座有任何嘅一啲 feedback 啦，咁都可以填翻喺呢個表格上面啦。喺 webinar 之後啦，咁我哋都會透過 email 咧將呢個表格咧係 send 翻俾大家嘅。咁最後啦，咁今日嘅線上講座就去到今日就圓滿結束㗎啦。咁都賣一個關子啦，其實我哋下半年啦都會有個線下嘅理財同埋退休嘅講座，咁大家都可以 follow 翻我哋嘅 social media， 留意翻我哋嘅近況。咁最後就祝大家喺2026年嘅下半年就投資順利。咁我哋下次再見啦，拜拜。